Hey guys, welcome back to L-Dubs Investing. In this video, we are talking the top 10 ETFs to buy now, having a look in some detail, guys, what they are, what they comprise of. Is this something you're interested in? Let's get into it. Hey guys, welcome back to L-Dubs Investing. If you like this content and you want more videos on stock market investing, don't forget, smash the like button and subscribe, guys. It is absolutely free. Let's jump in. Having a look at the overall market today, we have definitely had a green to dark green day today. We have tech and communication, financial services, consumer. Everything looks up today. Tesla almost 5% up yesterday, guys. What is going on in the market? This is crazy. Let's get into it. Alrighty, let's talk about 10 best ETFs to buy for 2021. A variety of ETF choices based on the 16% return for the benchmark S&P 500 index of large US stocks in 2020. Chances are that last year was a good year for investments. However, that worked previously on Wall Street may not work again in 2021. The political climate in the US is much different after President-elect Joe Biden win in November, and the pandemic is raging strong today, but hopefully sent to an end after the long-term rollout of vaccines. Given these circumstances, it is important to take on objective to look at goals instead of being complacent and sticking with the same holdings. If you're thinking of making a change or simply looking at to reinforce an existing investment strategy, here are 10 best exchange-traded funds or ETFs for 2021 that collectively offer a wide variety of opportunities. Alrighty, first ETF we're talking about today is, of course, SPY. It's the SPDR S&P 500 ETF. It's difficult to begin any list of the best ETFs. It's difficult to begin any list of the best ETFs to buy without including the biggest and most popular fund on the planet. SPY is the biggest, largest ETF by many measures, boasting around 330 billion in total assets at present and trading nearly 800 million shares each day. The reason it's so popular is that it is a benchmark of the popular Standard & Poor's 500 index of the largest 500 stocks. If you want to play the stock market but you're not sure how to do so, SPY makes it very easy for the investors to spread each cash across top companies. Alrighty, Invesco QQQ ETF, ticker QQQ. Of course, it's worth pointing out that while the S&P 500 added an impressive 16% last year, the Nasdaq's 100 index of the top 100 US companies listed on the Nasdaq exchange rallied a tremendous 45% in the same period. So why not skip SPY and go straight to QQQ, which is linked to this high-flying alternative? The fund delivered roughly 3 times the amount of its larger cousin, in part because of the total number of stocks in the Nasdaq 100 is much smaller than the S&P 500, allowing to focus more on fewer companies, but also because these individual names did so well, including e-commerce, Amazon, and the giant Microsoft, to name a few. Alrighty, Vanguard Information Technology ETF, ticker VGT. If technology investments interest you in 2021, then one of the best ETFs to buy is the Vanguard fund that is not benchmarked to a broad index of stocks, but rather to a list of companies that are only in the tech sector. Though the list of holding is bigger with more than 340 total positions, you won't find a single pharma company, mega bank, or retail as you would in the prior index funds. There's more risk here as a result, since your fortunes rise and fall with the fortunes of the big tech. But as VGT delivered roughly 45% returns last year, it is clear that this is a big potential for profits here if things go well. Alrighty, Vanguard Growth ETF, ticker VUG. If you don't want to go all in on a specific sector, but still want to focus on companies with high growth potential in 2021, VUG one is the best ETFs to buy. That's because it takes a slightly more sophisticated approach than the broad-based SPY or QQQ index funds by layering on screening methodologies and zeroing in companies that appear to be growing their profits of revenue faster than their peers. That means that you're exposed to tech stocks such as Apple, along with retailers such as Home Depot and even Railroad Stock Union Pacific Corp UNP. Based on the current numbers, with a wide variety of more than 250 stocks, VUG offers a diversified way to tap into more stock market growth in a single ETF. Alrighty, Schwab US Small Cap ETF, ticker SCHA. Another interesting approach to tap into growth potential without relying on a small list of stocks in a specific sector to simple go small. That's what SCHA offers, with a massive list of 1,800 stocks, many of which you won't recognize because it excludes the big corporations that dominate other index funds. Instead, top holdings include companies such as LED, light manufacturer CREE, and cancer-fighting startup NovaCure NVCR. The ETF comes with an ultra-low annual expense ratio of 0.04% or $4 for every $10,000 invested. iShares MSCI US Mini Volume Factor ETF, USMV. If you're less optimistic about the stock market in 2021 and instead want to take a more defensive approach, consider USMV. The name is intimately complex as a first glance, but it's easy to unpack. The ETF is a benchmark to a list of stocks compiled of MSCI, an index providing similar to S&P, and it focuses on minimum volatility stocks that go up and down less severely than their peers. This strategy is designed to give you an edge over the typical index funds with holdings like Big Para Giant, Merck & Co, MRK, and consumer staples king PepsiCo, Pepsi. It's easy to underline why the stocks in this ETF are likely to have more stable revenue trends than the other investments. Even iShares Core High Dividend ETF, ticker HDV, a twist on low-risk investing that offers a little more risk but also potential for bigger rewards, is a focus on high-yield dividend stocks. These companies offer proven stability through regular dividend payments to shareholders. As you have a substantial or consistent history of profits to share those profits with your investors. However, iShares have created this fund by excluding companies that offer below average dividend payments. Ensure you get a big payday. Specifically, HDV yields a 4% annual payout on your investment right now. The company with less than 2% yield from USMV, and a mere 1.5% from an S&P 500 index like SPY. Vanguard FTSE, the prior funds all focused on investments within the United States, but there's a great big world of popular trade companies. If you're either a bit skittish about the domestic stocks or simply want to diversify an existing portfolio by adding international exposure, then VAU is perfect for you. This is an all-world fund that includes every single geography, but it is also ex-US, so it excludes American-based corporations. That don't mean you get a bunch of tiny and unknown businesses. However, as VEU's top position right now includes Asian technology powerhouse Alibaba and Swiss pharmaceutical company Novartis NVS. Vanguard's FTSE Emerging Markets ETF, ticker VWO. For investors who are a bit more adventurous, this other international fund from Vanguard cuts out the larger companies in Europe, Australia, Japan, focusing on emerging markets such as China, India, Brazil, Russia, and Mexico. These markets come with a bit of risk, particularly when it comes to economic impacts. However, these are also have brighter long-term growth potential thanks to consumer and technology trends. Top holdings include Taiwan, TSM, and Chinese e-commerce company JD.com, JD. If you really want to look abroad for investing companies, this is a broad Vanguard fund offers access to more than 5,000 emerging market stocks in just one ETF. SPDR Gold Shares, ticker GLD. Given the political and public health uncertainty we face in 2021, gets underway, the stock market could be less attractive to some investors than traditional safe haven investments like gold. That's what GLD offers with an exchange-traded investment that consists entirely of gold bullion, whose performance is benchmarked to the precious metals. GLD is up about 25% in the last 12 months to beat the S&P 500 index of large US stock, so that's clearly profit potential in diversification outside the stock market. However, the commodity can be volatile and leave investors open to extra risk, as it is not a direct link to tangible metrics like profits and revenues of those public companies. Alrighty, just to go through the 10 ETFs we just spoke about, we have SPY, we have QQQ, we have VGT, we also have VUG, we have SCHA, we have USMV, we have HDV, VEU, VWO, and GLD. Hey guys, thanks for sticking around to the end. Did you like that list, guys? Are you interested in any of those ETFs? Did this video help you guys? Let me know. Please don't forget, if you like this content, smash the like button, absolutely subscribe. It is absolutely free. Speaking of free, check out the pinned comment to Coinbase and of course CoinSpot, guys. If you want to get yourself some free Bitcoin, you want to get yourself a free stock, check out the pinned comment to stake and we will spin the roulette wheel. See you next time.